What is Forex? Forex is essentially the act of exchanging one currency for another. Think about it like this. If you've ever traveled internationally, you've participated in Forex. When you go to a foreign country, you exchange your home currency for the local currency at a currency exchange kiosk, typically found in international airports. For example, if you're in the United States and travel to Mexico, you'd exchange your US dollars, USD, for Mexican pesos, MXN. The exchange rate determines how much of one currency you get for another. In the example given, if 1 United States dollar equals 20 Mexican pesos, then exchanging $100 USD would give you 2,000 MXN. This rate can fluctuate. Historically, it was even 1 United States dollar to 10 Mexican pesos. How can you make money with Forex? The core idea behind making money in Forex is similar to buying and selling anything else. Buy low, sell high. Let's consider a common currency pair, like EUR, USD, Euro to US dollar. If the exchange rate is 1.13, it means that 1 euro is worth 1.13 US dollars. When you're trading currency pairs, you deal with units of measure. A common unit is a standard lot, which represents 100,000 units of the base currency, the first currency in the pair. So, if you want to trade one standard lot of EUR, USD at an exchange rate of 1.13, you would need $113,000, 100,000 units asterisk $1.13 per unit, to place that trade. Now, here's how you could potentially profit. Buying at one price and selling at a higher price. The value of currencies is constantly fluctuating. These small changes are measured in pips. A pip is typically the fourth decimal place in most currency pairs. E.g., if EUR, USD goes from 1.1300 to 1.1310, that's a 10 pip increase. If you bought EUR, USD at 1.1300 with a standard lot, $113,000, and the price went up by 10 pips to 1.1310, your investment would now be worth $113,100. The difference of $100, $113, $113,000 would be your profit. Important considerations. While the concept seems straightforward, making consistent profits in Forex is challenging. Just as easily as the price can go up, it can go down, leading to losses. To increase your chances of success and minimize losses, it's crucial to have a clear understanding of technical analysis, which involves studying charts and indicators to predict future price movements. Basic financial fundamental analysis, understanding how economic factors influence currency values.